Good afternoon, everybody. Sorry for the delay. We're just waiting for Mr. Marco Hosanna to join.
All right, I'm here. Hello?
Hi, Hosanna, can you hear me?
Yes, I can hear you, Chris. Good afternoon.
Good afternoon. Okay, everything is okay now. You may proceed.
All right, thank you very much.
Thank you, Hosanna.
All right, can everyone hear me? Hello? Hello, good afternoon. Hello, good afternoon, everyone. Can you all hear me? All right. I need you to confirm if you can hear me so that we may proceed. First of all, I want to thank everyone here. I want to thank everyone here tonight, this afternoon. I want to thank all of you for making our time to be here. And I'm very grateful to all of you for being here today. I also apologize for the delay. If I very much welcome. So I also apologize for the slight delay. And so we're going to get right into it so that you know, we can make the most use of our time, right? So I told you last time from when we were here, and I introduced the class to you. I told you that this time around we're going to be in for some live trading, and you will not even believe the amount of moves that the market has made in the past few days. Just between Monday and today, this was a trade I got in. I think I got into the trade. Some students within the community got in as well, and we were quite a long distance from our target. However, we did execute on this trade within the community. So if I just have a moment to pull that up into the screen, I want to show you how we executed on that within the community. And these are some of the benefits that you're going to get if you come into the community through TickMill, because Chikoro Trading Academy, as you all know, we provide trading education and nothing more than that. We provide trading education. The goal of providing you with trading education is to make sure that we help you to be consistently profitable in the markets. And you know, profitability in the market is something that traders struggle a lot with. And the very reason why we're here is to help you get profitable. So if you can just see my screen, this is within the community. And you can see at the time when I sent this, it was yesterday. You can see the time here yesterday at 9:45 p.m. June 27th. I sent this yesterday to the community. I said, your USD is looking to fill some short-term imbalance, and I'm expecting to see shorts coming out of those fills. So these are the terms that we use within our community. Excuse me, these are the terms that we use within our community. Of course, given to our style of trading as well. So keep your eyes open for sell entries. You can see that here. Keep your eyes open for sell entries. We have a lot of news coming out this week, so it makes sense to go in with less risk. So personally, I was in 0.5% risk. That is less than 1% risk as well. And the reason that I got in with less risk than usual is because we have very wild markets coming this week. We have loads and loads of news coming out, especially out of EU. So if you're trading a currency pair that has multiple news releases on the way, you want to be very careful with such currencies. You don't want to go in with too much risk. So I have a $300,000 funded account, so I have to go. If I go in 0.5% risk, that is still $1,500 risk on a single trade. So it's still a sizable amount of risk on my own end here. So you can see different analysis. You can see how this analysis, for instance, was given on June. I think this was June 11th. We gave this analysis when GBP USD was around somewhere here, around 1.25787. And if we critically look at Oops, now you're seeing the market unfold in front of you. Don't worry, I'm just going to show you how we got into that trade and the entire thought process. I'm still going to walk you through the entire thought process. So GBP USD, the analysis, 1.25287, that was where we had the analysis back then. And if we do look at the price right now, you can see that 25787, you can see the market has actually superseded where we analyzed it was going to go, where all the price level was going to go. So the market was lost something and then we called that price level up there. The reason, okay, so this is it here. So this was where the market was. Looking at this, I think this is, I'm not sure what time frame that is. Can't really see that very well. Okay, so this was the weekly chart, all right? So this was the weekly chart of June 11. You can see June 11 weekly chart, and if we now look at, if we go back in time, you can see that the market went from June 11, had this spike. And if we just take away all that, you can see that, yes, we did get that move that we were looking for. You can see that move came through. So it is about, we're going to show you the exact way that we're able to look at these markets and call these price levels, and also show you how very easily you can do this and how it is possible for you as a trader to be able to look at the market in real time and analyze the market and remove the confusion. Because the truth of the matter is, I've been there, I've been a beginner trader, and you will not even believe the amount of confusion that you can run into as a trader. So that was why yesterday, when I was sending this analysis, I decided to make a screenshot of it and also send it to the community, because I knew very well that there could be a chance that I might not be able to take this trade live today. It might play out, it was going to play out before the trade or before the webinar. And if it plays out before the webinar, definitely I cannot wait for the webinar before I take the trade. So I'll automatically be forced to take the trade, and ultimately, I think something is wrong. What is wrong with my computer? Hello? I think something is wrong. Hello, can you hear me? I think something is wrong. What's going on? Okay. Hello? Please, can you confirm if you guys can see my screen? Can you please confirm in the chat box if you can see my screen? Audio is bad. Okay, yes, I can hear you. Yes, we can hear you. All right. Yes, we can hear you, but we can also see your screen. All right, thank you very much, guys, for letting me know. So this is the trade from yesterday. So yesterday, when I sent this to the community, so I'm not sure I placed that. Okay, so please, anyone who has any questions, please be sure to leave them in the comments. And you can see that I am not really trying to impress anybody by having a tight stop loss that is somewhere around here. These things, we see these things online every day. We see stop losses that look like this. Those are very, very realistic stop losses to use. The market is going to pick that a lot of time, and it doesn't make any sense taking all those losses while just trying to get a very tight stop and all that. You don't need to do all of those things to actually make my trading markets or to be profitable. So I'm going to quickly walk you through how we come up with long-term projections in the market. So for me to do that, I'm going to have to go to a very brand new chart. Let's pick more of always big fan. All right, so let's pick something from, let's pick a different broker, a feed from a different broker today. Let's pick a different feed. And we usually start, when you're looking at the long-term picture of the market, trust me, you will not even believe that I look at the yearly candle to determine what the rest of the year is going to be. So first of all, if you look at each candle here is 1 year. If you know your candlestick anatomy from beginner's class, you remember that each candle here has the open. For the red candles, we have the open, the high, the low, and the close. And then for the bullish candle, we open lower, make a low, trade higher, and then close. So this is open, high, low, close. Each candle has 4 cardinal points. And at the beginning of the year, I said this to my community clearly in early analysis. I said, I would expect the market to trade higher before we begin to sell off for the rest of the year. And why is that? If we look at this price action from here, I know it looks a bit clumsy. However, we have impulse, that's a series of multiple years, 1, 2, 3 years down the line. And then we go sideways. 3 years of bearish price action, and then we go sideways. And then last year, 2022, we came down really hard. And then what did we get? We got a break in market structure. Remember, 2022 price action. This is how we look at the market long term. And trust me, I don't have anything to hide from anybody. If you can learn this today, you can run with it. All right. So 2022, we traded down and broke through structure. We cleared this low. And if you look left further down the line, you will notice that we feel this imbalance in price here. And I always say one thing, whenever you see the market making any move, the market is traveling to do one of two things: to fulfill imbalance and to clear liquidity. And of course, liquidity is, remember from last class, I said, behind every structure, behind every high, behind every low, behind every high, there is liquidity there. So think about it like soldiers in the battlefield. And then you have these pillars, or you have these embankments that soldiers can hide behind and release their shots from there. That is how you want to look at this thing. So you want to know that behind every pillar, behind every bag of sand or whatever, there is a soldier behind it in a war situation. And of course, in a market situation, behind every structural high, you see that behind here, there is liquidity, a bunch of money sitting in the place. And then while the money sits below here, the market eventually comes for this liquidity. The market eventually comes for it. There are a bunch of very big funds, there are medium funds, there are even long-term traders, probably who are managing private equity, who are managing small investments, all of those things, that would have bought a short somewhere around here. So they would have gone long somewhere around here. And then the market takes, eventually the market comes to clear, to liquidate them. And this is why you see yourself sometimes you're trailing your stop loss. You probably had a profit of about $500, and eventually the market comes back, sweeps up $300 out of your profit, and then takes you out behind the high where you're trading your stop loss. And then you're left with $200 profit. The market knows, the owners of the market, the institutions who run this business. And most of the time, when you hear people who tell you, oh, the broker is manipulating me, this is happening, the broker does not have anything to do with this. The broker is simply giving you fees that they receive from the liquidity provider, and that is all it is. And a lot of the time, when we see people say, oh, the broker is after me, oh, the broker did this, a lot of the time, it is people who do not have the understanding that we have. That is actually the problem. So we see this behind this level. The market will always take this. It does not matter if it takes 10, 15, 20 years. I will show you further down the line how years and years of liquidity will eventually get taken. I'm going to take you to USJPY, and you're going to see that it does not matter how long the market stays away from that level, the market will eventually pay for it. So you can see how behind this low here, we have sales of liquidity, and you can't even believe how many people believe that the moment the market trades below this level, that the market is going to continue selling. So those are very confident. They come in here and they put sales for the market trades, triggers them instantly, and now they're active in the market, and then the market turns around. And now they're in a loss. So these are the kind of areas where bull and bear traps are set. I want you to understand one thing. Institutions will never, ever trade in no man's land. And that is one thing that I want you to have at the back of your mind. You must wait for price to come into very, very juicy areas before you trade. If you do not have the patience to wait for price to come into very handsome areas in the market, it is very unlikely that you're going to make money in this business. You must wait for price to come into these areas before you begin to take action and before you begin to engage. So looking at last year price action, remember we're looking at very high time frame, how we pick long-term direction. If you can pick the direction of the market on higher time frame, and then you're going to couple it with some other understanding that I'm going to give you. And then you're going to couple it with understanding how open high low and close analog shorts. This thing that I just read. If you can pick these two things out of this weapon, I can assure you it will change your game. Completely. It will change your game.
Hosanna, can you hear me?
Yes, I can hear you.
Unfortunately, sorry for interrupting you, but unfortunately the audio is very, very bad. Your voice keeps breaking. Is not very, we cannot understand clearly what you're saying. Is there a way you try to fix this, please?
Okay, all right. Please just give me a minute.
Okay, thank you.
All right.
Apologies to everybody for the interruption for this, but we need to fix the audio. Thank you.
Hello.
Is it better?
Now is much better.
Hello?
Yes, can you hear me?
Hello?
Yes.
Hello everyone. Can you hear me? Is this better?
Yes, we can hear you.
Hello? Is this better?
Yes, can you?
Yes, I can hear you. Is this better now?
Yes, please continue. It's much better now. If there is an issue, I will let you know again.
All right, thank you very much. Thank you.
Thank you.
All right. So apologies for the audio. I think now we're back on track. Hello, sir. Can we get the record of the webinar session? The webinar session, just make sure that you stay tuned. All right, thank you. Just make sure that you stay tuned. All right. So I want you to understand something. Like I was saying earlier, behind every high here, behind every low rests liquidity. And I want you to get your mind out of, oh, the broker is manipulating me. This is happening, that is happening. The broker is not manipulating you. The market runs on liquidity. The market runs on liquidity, and liquidity simply means money. So until orders are washed out of the marketplace, there is no way the market will change direction. And I want to make this thing very clear today. Until stop losses are hit, there is no way a big move will happen, and there is no way the market can change direction, because the market actually needs the liquidity on the other side to fill the orders. And I said this last time. If, for instance, you want to take a trade, for most of us, I might be in a trade with 20 lots, 30 lots, but then there are people who do not trade 10 lots. They do not trade 100 lots. They trade 10,000 lots. They trade 50,000 lots. You will not even believe this. Thousands of lots per trade. If these guys, these big institutions, they want to get into the market, they will not get into the market at any price, right? They have to take time for the market to be able to generate the liquidity they need to fill their position, because it is not enough orders to go around. Because on every broker, on every platform, there are buyers and there are sellers at every given point in time. So whenever you place buy, someone must have sold to you. It is someone's sell order that was matched with yours. So if the market, if the institutions want to get into a buy position, they have to trigger enough sell orders so that they can buy up from those people who are selling. And guess what? Who are the people who are they buying from? They are buying from those who are selling the lows here. Imagine you come to this low and you want to be a seller because the market broke through this low here. And if you have, please, I want you to really pay attention to this, because if you understand this, you will go very far in this business. The moment the market trades below this low here, a lot of people begin to sell and feel, oh, the market is going to keep selling, it's going to keep falling. And then they begin to quickly sell that. But guess what? As you're selling, that is enough liquidity for the institutions to buy it up from you. So on the other side of your order are the big boys and the big banks buying up all those orders. And as they are buying, eventually it leads you. So of course, they make money long-term and retail loses money long-term. And this is why retail loses money. So now I want you to pay attention to something. This is a yearly chart. Each of these candles here is 1 year. So last year, 2022, we had a very big fall, a drop off. I know we have this open. This is for every candle, we have 4 cardinal points: the open, the high, the low, and the close for a bullish candle. And of course, a bullish candle will open low and close higher. A bearish candle, that's a red candle, will open higher and close lower. So last year, what we had was the market came down very aggressively and cleared this low. And the reaction you are seeing from here is the market reacting to all of this liquidity here. You will not even believe how many orders we have sitting beneath this point from here, right? Take a look at it from this low to this low. You will not even believe how much money. I'm going to use the Naira sign to denote that. L. You will not even believe how many people's money are sitting below this point. The market comes, runs through all of this liquidity, and immediately a lot of those people are entered into the market. And the moment they're entered into the market, what happens? The market goes the other way. This is where you see people, oh, the market is as if somebody, they know when I want to buy. The moment I buy, the market will sell. The moment I sell, the market will buy. Trust me, I have been there. I've had these experiences, and I had to really, really sit down to look at this thing before I could get it. And one thing I want to tell you, whatever I show you here, please go home and back test this. And if you have any questions, leave them in the charts. And don't forget, you can also join our community by making a deposit with Tickmill, and then you'll get access to our community, and you will see me demonstrate all of this day to day. All right. So getting on with it. Remember, I told you behind every high, there's liquidity. If you check every major move that has happened in the market, they will always happen after major highs and lows were taken. The moment there's a major high being taken, the market always runs the other way. So for instance, we have this one here. The market takes it, we go the other way. And somewhere below here, we have this one. The market comes, runs with it, and then we take off. You will not even believe how many times this repeats itself. We come, run through this high, and then we come down. We come here, run through this low, and we come up. But guess what? While we are looking at this, we have to trade it in line with an underlying trend. Yes, I can agree that we have a push here. We have a push from here to here. We have this bullish push. We had a bullish push from here. This is 1971. I wasn't even born then. So we had this push from here. The market came down, rallied again, came down, rallied again. But I want you to understand the characteristics of what is really going on here. From here, we had a very aggressive push. Different phase of the market. Here, we had an aggressive push. But guess what? Not a lot of steam. It wasn't as strong. And then from here, not even enough strength. It doesn't even look at it. So what you want to know is you want to compare how quickly the candles go up and how quickly they just sustain that up movement. But then from here to here, we're not having a very aggressive movement to the upside. And you can see that wild consolidation and the market is coming down. But that is a different story for a different day. But please pay attention to what is going on here. When the market opens, when the yearly candles open, the market will first of all trade to create the high of the year. Because last year, what was the highest price point that Euro USD traded to? It traded to 1.14943. That was the highest point it reached last year. And the lowest point it reached last year was 0.95356. I remember there was a time, if you were paying attention to the charts last year, you remember that there was a time the euro was weaker than the dollar, and then the dollar was stronger than the euro for a while, and everybody was like, whoa, you know. And I'm sure there would have been a lot of people who would have tried to maybe sell the euro further, not knowing that when you see things like that, that is not even the best time to start trying to short the asset. Excuse me. So this was the high of last year. This was the low of last year. So the market has to print the high and low of the year before making its run. So what happens? When the market opens, we have an open. Please pay attention to this part because this is where it really gets interesting. Each year, the market will open. The market will trade higher, then trade lower, and then go up. That's where you now see that's where these things you see here, these are the wicks. It goes up, comes back down. These are the wicks. So all these tails you see here, these are areas that price went to, could not sustain, eventually came back down and closed lower. So that is the meaning of this open high. We come back, create the low, and then we close somewhere here. And then this part to this down is the wick. From here to here is the wick, and then this part is the body. I hope that makes sense to you. So when the market opens for the beginning of the year, we trade higher. What happens next? We begin to push down. So this move, the moment the market opened in January, I knew very well that the market has to make the high of the year. And then guess what? We even have a very long wick. The market usually fills up wicks. The market does not like it when you see this week, this long week here, usually is indicating a very huge imbalance. The market eventually trades in there to fill it with bodies. That's how the market behaves. That's what we see over time. So when we see these types of wicks, for instance, looking over here, you see this, I don't know if you guys are enjoying this cross on my chart. Let me just use the dots. I think it's better this way. So when you see this wick, for instance, over here, you have this wick here, and then the market comes back, the market leaves this wick. Eventually you see bodies coming down to fill it. Eventually bodies coming back down. It has to be filled eventually. So what we have here is we have a wick, right? So what does that tell you? And we are breaking structure to the downside. We came down impulsively, had a corrective phase, came back down, broke this structure to this downside, and then the market reacted off of all this money sitting here, and then we pulled back. So within that pullback, what are we expecting? We're expecting to see the market at least continue its push to the downside for the rest of the year to fill up this imbalance or to fill up this wick here. So the market opens for the year, trades higher. Remember, we open, we trade higher, we trade lower. And remember, when we get to the lows of the year, please, you want to make sure you are taking your profit. If you sell, I don't know how much you have in your account that can enable you sell this and hold it for the rest of the year. But this is to give you a long-term guide so that when we are selling consistently, you understand why we are selling. That we are selling off of a higher time frame narrative with an understanding that the market is heading down. All right. So, if we get down to the lower time frame, we can now see it clearer. If we get down to the lower time frame, we see the market for what it really is. And what is that? We see a very huge impulse, very successive quarters. Remember, this is now 3 months of price action. Please, each of these candles is 3 months. That means quarterly time frame. And if we are to evaluate what we do, the performance of our business, the performance of our markets, whatever, we know very well that, we usually say, the first quarter was good, the first quarter was bad, etc., etc. However, in this instance, what we do have is a very strong impulse, aggressive quarters, set of quarters, 1, 2, 3, 4 quarters down the line, and we see the market pushing down. And then we go into a corrective phase. I want you to also pay attention to something. Remember, I told you big moves don't happen until highs and lows are taken. And you might be asking yourself, okay, where are the big moves? Where are the highs and lows that got taken in this business? Calm down, I'll show you. For instance, we have this one here. I think I've shown you this. I showed you how this market took this high. Look at that fall. We ran up from here, ran through, came back down, and it created room for this sell-off you see here. Now, I want you to understand something. We are dealing with structure of the market. And if the structure of the market is heading down, for instance, we had this from here. We had this push down. We had this low. The market traded down, broke through it. That is a break in market structure. What we like to do is that we like to measure it. That's to turn that off. We like to measure it. A lot of the time, we will not accept anything that is less than 50%. So what do? We measure from the highest point to the lowest point of that impulse. And what we want to see is we want to see a minimum of 50%. Remember that how we trade is we're looking at premium and discount pricing. So remember, when the market is at a premium, you sell, and when it's in a discount, you buy. Of course, you know that with your normal analogy or the normal market, when they say they are doing a promo, you always want to know when, you always want to go and buy when companies are offering discounts on their products. That's what you want to do. So one of the things we do the most is from this high to this low, yes, anything around here, the moment we breach all these lows, for instance, we have this low here that was broken. I think the market took that out. Yeah, it took that. The market takes this low. Okay. The market takes this low. Well, I think it's equal lows anyway. It's equal lows here. So the market takes whatever low that we have to the left, this one, whichever one, all of these areas you see behind you, please take note. Every low you see is liquidity, every low. And the market will not make a big move until it is taken. We come back, we take this, we run. We come, we take all of this in quick successions, and then we run above with it. Then what happens? Somewhere along the line, we create this one. The market runs it, eventually runs back down, and this is the move. Everywhere you see a high and a low, pay very deep attention. The reason I'm showing you all of this is just take a look at everywhere on your chart. You will not even believe this. Take a look at this. The market comes, creates this low, we take it, and we go. We come here again, there's a low. What happens? We take it, and we go. I can show you this thing on any pair under the sun. You can suggest, okay, hi everybody. Please keep your questions. All right, please. Someone is saying I can't hear anything. No, can you guys hear me very well? Please use the chat. I just read the please, can you please? Okay, perfect. All right, thank you very much. All right. So please, you can suggest any currency under the sun, and I will show, even in the stock market, any stock, any index, you will see this thing there, liquidity everywhere. So the market is governed by liquidity. So first of all, we come down hard and then we head higher. So what are we trying to show you? We are showing you that the structure of the market is buried. So one thing we want to do, this is best traded in line with the trend. We want to make sure that we are trading predominantly with the trend. So if we are in line with the trend, then we want to look for opposing liquidity on the other side. That is liquidity to the buy side, to the upside. Of course, I'm going to demonstrate that in just a minute. And that is where we want to position ourselves. So, of course, we measure it. So if we are to take this same analogy and bring it down here, we have this is the high and this is the low. Do we have a discount on premium pricing? Yes, we have traded right now. We're currently trading below equilibrium. We have traded into this. We have traded into the discount, into the premium. But of course, we did not really sustain the trade into the premium. But you get the point. The point is we do not sell anything below the 50%. Anything in discount, we don't sell it. We only buy it. So this is how we position ourselves for long-term excellence in the market. We only buy when it is cheap, and when it gets too expensive, using this model here. This is actually a Fibonacci tool. I think there was some trader I saw. I think there's another one that is called the Gann tool or something like that. I don't know if it's the Gann box. I don't know how. Okay, obviously I'm not using that. So, but use the Fibonacci. Just use 3 levels: 0, 50, and 100. That's all. Anything above, you sell. Anything below, you look for buying opportunities. So even though as traders, if we take a trade from this area and the market is selling to the downside, this gives us enough guide so that we do not, for any reason under the sun, come down here and start accidentally selling or start getting interested in taking sales. Why? Because we are in the discount region. Within the discounts, what we do is that we strictly buy. And if you also look left, the market takes the low. Can you see? This low was created. The market takes it. Let me delete this Fibonacci so you see the market hits it and turns around. It is not an accident, guys. It is not an accident. And this is why I am so confident when I trade. I'm so confident when I call setups, when I call levels, because I know that even if, for instance, this low that we have here, I know the market will not leave it alone. Next year, this year, whenever, the market will surely come for it. Definitely, the market will come for it. So we see that the structure of the market has been bearish across very high time frame quarters, down, impulse, we have another down. What we do is that we now wait, we take the measurement of this level, come down here, and we wait for price to trade back into premium so that we can start looking for sales. And when we get into the premium, what are we looking for? We are looking for major liquidity levels. Now I'm going down to the monthly time frame. We are looking for major liquidity levels that are found in the premium. Now, if we find any, for instance, there's going to be liquidity everywhere. This is how to actually do this and differentiate this properly. There's going to be liquidity somewhere within the buy zone, Yeah, I mean, if you choose to sell that, well, you might just want to take a quick one-to-one and get out and not hold it for long and think the market is going to collapse from there. But within this discount, I think I might have to just color it green so that you understand. I don't know. Let's see if we can color the red. Sorry, guys, just a minute. Okay, so I think here, let's make this red. That's where you sell, and here is where you buy. All right, so this is it. So we sell anything here, we buy anything here. So if we are within this zone and we find a certain liquidity level, yeah, I know that, yes, like you can see this example, by the time we get down to lower time frame, we're going to see that the market really reacted off of this level, but it is not the kind of reaction you want to be looking for. You want to look for this move that I'm talking about inside of the premium. This is how we use this. This is how we trade. So we want to look for it strictly within the premium. So now pay attention, guys. Please pay very deep attention. Now, as you can see how I am coming from a higher time frame, I started coming from the yearly time frame, and I showed you how each year has to open, trade higher, and then the market starts to come down. You cannot stop the market from doing this, because for every single year that we come into, the market has to seek liquidity to be able to make its move. The market has to seek the liquidity to do that. So if we come into a particular year, and this is exactly how this thing repeats itself every day, every week, every hour. If we come into a new week, the market has to create the high of the week by either running the liquidity of the previous week or running some liquidity found within the weekly candle, and then use that liquidity to make the move for the week. I'm still going to show you on lower time frames. So this is what I want you to understand. The market needs funds to go around. And I want you to understand this thing. If you're going to be a top trader, if you're going to really do well in this business, you have to seriously position yourself with this. This is the market. I can guarantee you that if you learn this and put this into practice, if you notice as we're talking, I've not mentioned support, I've not mentioned resistance. I am telling you how the market looks for price and how the market genuinely moves. This is what you will understand, and it will do you a great deal of service. So remember, we have this high, this low. Remember, this was the highest high from last year. I think this was the lowest low of last year. We expect the market to continue down. But what do we know? We know the market is not just going to go there immediately. So what does the market have to do? The market has to seek the liquidity it needs to fuel the run for the year. So what do we do? When we come into the premium, zone, the first thing we do is we want to take note of liquidity levels that are in there. We see this level here, there's premium, there's liquidity there, and then here. Very, very good points. Very good. Why? Because you can see this one here. I mean, yes, it's liquidity, but the reason we do not care about it, the reason we are not paying attention to it, is because it is in the discount region. Premium and discount pricing. Think about it like this. When a company is offering you discount on product, Black Friday, like they always call it, you want to go out there and buy as much as possible. A big shout out to the Muslim brothers anyway, who are having their Eid al-Mubarak today, I think. So big shout out to you. So a lot of companies are doing a discount on their celebration as well, Muslim celebration. So we have a discount. So you want to go out and buy the products of those companies because they're offering a discount. So here too, if there's a discount in the market, it is the same thing. You have to see this market as every other market you go to. So remember, we might have taken a short-term sell in this business or in this trade, but remember that the short-term sell is not, we're not taking the sell because we are instantly expecting the market to go to hell immediately. No, we're not. Because even right now, there is no clear break of market structure to the downside just yet. I'm going to show you why there is no break of structure yet. So first of all, we have price taking off from here. We create this high, we keep going, and then we run liquidity. This high here, this sell-off you see here, if you look left, remember, behind every high, what do we have, guys? Behind this high. Oh, God, sorry. I think it didn't pick that. So behind this high, I can show you this thing on 10,000 different pairs. As long as it's something traded on the exchange, you can apply it there and it will work. I'm going to show you this. I'm going to go around different pairs. I think no one has even put in a pair yet. Okay, please show us on gold. All right, I'm going to show it to you on gold. So you can see this high, the market comes, creates a high here. The market runs this liquidity, pierces it, comes back down. And then we leave that one alone. We create this one. We pierce it. What happens? Come on, guys. This is not even. And the reason the market is leaving behind all of this, you can see from here to here, we have a failed low. From this low to this low is a failed low. That means the market is not really interested in taking out this liquidity yet. It's still protecting it. And then from here to here, we have another failed low. I mean, this is where you now look at it like if you trade chart patterns, this is what your chart patterns mean. Trust me, this is what your chart patterns mean. So this is what it'll look like. It'll look something like this. But it is the understanding of liquidity that guides you. So first of all, what we are expecting is if this market is going to make a major move, we have this is usually the reversal is usually stronger when it drives 3 times. When you have this first move, the second move, and the third move is usually very crazy. So on this particular one, we're expecting this third move to lead right into this liquidity level here. Buy side liquidity. And trust me, by the time we get here, you will not even believe how many traders will be thinking that, oh, the market is, this is breakout traders. Trust me, there are breakout traders. I don't know if any of you are breakout traders here, but there are so many traders that are breakout traders. They expect the moment the market goes above here, they're expecting an instant, they're expecting the market to keep doing this. But really, the market does not operate that way. When the market gets here, it is going to use all of this liquidity to initiate a move to the downside. And if in initiating this move to the downside, we break through structure, any of these structures that gave us a new high, if we break through any of it, then automatically we're in for the long run to the downside. So this is how we qualify all of these moves. I think the screen is getting a bit messy. It's time to clean up a bit. So please, if anyone has any questions, please leave them in the Q&A session. Definitely, I'll get to it by the time we're done. So now you can see why we are waiting for a move back into these highs. We're not waiting for this trend line to touch for the third time. That's not what we're waiting for. It just happens that this touches on the trend line just coincide with what is going on around liquidity levels and the market using those liquidity, using those orders behind those. Okay, now, do you think there were no traders that went short at this level and then they are holding their stop losses up to this point? Do you think there are no traders waiting to buy the break of this, either in form of some break and retest or something, maybe something that looks like this, support and resistance? Do you think there are no support and resistance traders who want to buy the moment the market breaks above? Yes, the market can give you that, but you'll be lucky to always get away with a one-to-one. That's why if you do not have a very, very solid system that gives you the long-term direction of the market, you really, really want to be getting in and out of the market with good risk management, take one-to-one and leave the market if you don't have a deep understanding of what you're doing. That is one of the things that actually stops people from being profitable. You want to hold your trade for 3 days, 4 days, 5 days, and eventually the market just, comes and crashes everything. So as this market stands, we still expect the market to actually come up, run into this level, and then give us that move. However, because nothing is set in stone, if this market comes down, if the market trades below this low, right, we will not consider it a break in market structure. We would see that, oh, it's a run on liquidity. We can continue to look for buys to the upside. But you see this low here. Let me put on the magnet. You see this low here? If the market breaches this in this run to the downside, then I know very well that structure has been broken, because this is the last low that produced a new high. You can see this low came here and produced a new high here. So this low here did not produce any new high. You can see from this point to this point, it did not go above this one. So for us, when this happens, this is not a break in market structure. Please, I want you to understand these things, how they work. So these are some slight differences that I had to struggle with. I had to try to understand all of these things. And eventually it requires time and practice. Please, if you see anything here, anything we say here, please make sure that you go home, look at your chart. I'm still going to go into the chart. I'm going to demonstrate this for you. Look deeply at your charts. Spend time with this, have a deep understanding, and very soon we're going to have our physical office very much ready. We are almost at 90% completion. We're very close to, taking in students for the next batch. So please, so that when you come to class and we're talking about these things, you will have a deep understanding of what we are talking about. I'm very happy and proud of some students that came from last set of beginner series, very outstanding trading students, very outstanding traders they've become right now. And I'm so happy with their performance, and I cannot wait to produce more traders like that. All right. So please make sure that you practice these things. It takes a great deal of practice to actually be able to have this, under your belt. All right. So please make sure that whatever we say here, that you actually take enough time to practice all of this. So I think since we did not start early and then we had some technical issues as well, I'm going to, I think we're going to go beyond the 4 o'clock mark. So please, all your questions, if you have any questions, can it be used on BTC? Victor, yes, it can be used on BTC. It can be used. In fact, right now, I'm going to have to head over to other pairs, and I'm going to demonstrate this over there. However, one thing I want you to know, let me quickly show you. I think this is on 8 cap. So this is our trade. Let's see how it looks. You can see how our trade, oof, boy, this is looking so nice, guys. All right. So, I mean, I'm sure if I had probably come here and told you guys that, oh, yes, this is it, you guys are going to feel like, oh, no, he's not really talking about it. He didn't really take the trade. But at least I showed it to you on, Ifeanyi, I think you would have taken a 1-to-1 on this trade. One of our students, I think Ifeanyi would have taken a 1-to-1 on this trade because he showed me his entry. We all took this trade yesterday. So this is how it's looking. If you notice, my entry, where I am looking to get out of the trade, is not here. Like I told you, this was the low that I showed you earlier. This is the low that if this low breaks, I know we're done with the uptrend. So you can see how I am getting in and I'm aiming for this level and this level, because I know eventually if the market takes this level, we could get that very big bounce back into the trend, and then we use it to run for this liquidity. And you will not even believe how much we have. From here to here, we have over 300 pips from here to here. So we still have a very decent move coming in to the upside on Euro USD. So most likely you might still see your local currency get weaker against the dollar. You might still see, you might see your local currency get stronger against the dollar. It's just what it is right now. That's what's going on in the world. The dollar is actually weak, and the market is doing its thing. All right. So if you notice this entry here, this entry is not based on this high. It is based on something I saw on a much lower time frame. So can you see how we trade? I have nothing to hide from the world, nothing. So it was here. I did take a bit, my entry here was a bit riskier. And my entry here was a bit riskier because I entered on the close of this candle. Usually the rule is to enter on this candle, the first bearish candle that closes, that's where we enter. But for me, I entered on the close of this candle, and then I had to, withstand this very wild consolidation that followed after I took the entry. I mean, it was really annoying. And by the time I woke up last night to check the trade, I checked the trade around 2 a.m. in the night. It was just like, I was like, what the hell? The market was just, dancing around. I think it was somewhere around here. Then I tried to go back to sleep and I couldn't go back to sleep. But anyway, this is how it looks from here. This high, we take this entry, and that is it. So if you correctly apply this, I can assure you, it will change your game. It will, for real. So please let me quickly take a look at it on BTC, as some of you have rightly requested. So, for my brothers in Bitcoin, for my brothers in crypto, I'm going to delete everything I have on my chart. Everything has been deleted. And I think, where did Bitcoin start from? Okay, I think this is where Bitcoin started from. There's really no market that can operate without liquidity. And I think this is Bitcoin in 2017. Okay, guys. So we take this low. What happens? We run it, we take off. And then subsequently, we don't get any further entry until somewhere here. You will not even believe how your eyes would naturally see these things by the time you start. Some of you might wonder, like, how is he able to see that? That's a lot of training. My eyes, that's why I said you cannot do it without practice. Your eyes have to be trained to spot these things. The moment you see it, you know it's there. You don't need to be told. And sometimes that's why when some students send me their chart, I am so happy that yes, it makes a lot of sense that someone can actually understand this. So we run this level, we keep going, and then subsequently there's a very, very wild run. I mean, if you miss this one, it will be very difficult for you to get in along the way and all that. But of course, on the way down, we are going to definitely find something. So what happens? We come, we create these highs. We create this high, we run through it, we get a bit of sell-off. The moment the market starts taking out multiple highs in quick succession like this, you know something is about to happen. We take this one out, we have a rundown, and guess what happens? We get the first break in market structure. We get the first break, and then we create this high. This thing you see the market creating highs and lows it wants to take out is usually called liquidity engineering. So what happens? We create this high. This is Bitcoin, guys. We come, we run through it, and you can mention any pair so that it won't be that, oh, he has gone to rehearse it and he's not showing us. Now, the market comes, runs through it, and down we come. So what happens when we take this low here? We take it, we get a bit of a retracement, and then we come back down really hard. And if we look left, do we take on this lows here? Ooh, we take it, and there it is. And on this particular level, remember, we can now say, oh yeah, from this high to this one, we can get the discount on premium pricing. But then that is not really the thing we're trying to talk about. Here, we take this, we go. Please and please go through your chart. Just look through this thing. You will see any pair under the sun, like clockwork. We take this from this high, we run this, down we go. You can even use this one from here to here. It just keeps happening. They know all these highs and lows. Oh, okay, yeah, so here. So we take this high, we come back down. And then what happens next? We start hitting the other side of the market. I'm not really going to try to show everything, but if I do that, that would mean I'm doing your homework for you. So why do you think this spike just came for this level and then it stopped here? There's money sitting behind this place. There are some traders, those guys who normally call me out when I talk about crypto on Facebook and all those things. So the market comes, we create this high, the market runs it, and we go down. We're actually running out of time, but I want you to know that this is a system you can apply anywhere. Please look through it. This is Bitcoin. I'm really trying to not do too much. This low, why do you think behind every high, behind every low, there is money? See it that way. We run it, we go, we run it, we take off. And then what happens? The high that we left behind, somewhere here, the market comes, hits it, and takes off. Can you imagine what your life as a trader would be if you can consistently look at the market with this level of precision? Yes, there'll be losses somewhere along the line, but your home run trades will be home run trades. The trades you do take that will pull in money will do exceedingly well in the market. And that was why when crypto was around 60,000 and I was calling price levels to the low and I was telling traders it was going to really sell off, this was my point. And then guess what happens at all-time highs? At all-time highs, we create this level. We take it out and then come for this one the second time. Boom, down we go. And then here, crypto, this is Bitcoin, guys. Okay, this one created equal lows. Whenever I see equal lows, it gives me the biggest clue that the market is eventually going to go there. These are one of the clues it gives me. Whenever I see equal lows, I know the market will never leave it alone. It must go there, must. So, I mean, come on, guys. I'm going to try to. So it creates this one, takes it out. Don't worry, over time, if you practice, your eyes will naturally spot these things. This is not me giving you a trading strategy. Oh, this is a strategy. Go do this, go do that. Trust me, if you go and backtest this and it's not working for you, or you go and backtest this and you find that what I've said here is the lie, behind these highs and lows, I am prepared to stake my trading career on this thing. Like, go and backtest. Take a look at this. This is crypto, for God's sake. Yeah. We come, we take this low, and we go. This is the market. The market is governed by liquidity. It's not your support, it's not your resistance. Yes, sometimes it does coincide where there's back-end liquidity and all those things. Those are the advanced things we teach within the academy. However, we do know very well for sure that what we teach works exceedingly well. What about those that can't attend physical classes? You will join us online. We have a very, very good trading course coming your way real soon. So please make sure that you connect with us on that one. So those of you that cannot connect with us, you can join us online. And of course, our new office, we are going to have facilities that will enable us to stream the courses, the classes live as well. So make sure that you stay connected with us. All right. So Frank asked me about gold. I think, I've pretty much done enough on all of these pairs. Right now, you can see this is my analysis on gold. Please, that gold will be your assignment. We really do not have enough time to go around all of these things today, but I can assure you, and you can equally see here, these lows you see here, this is not me drawing chart patterns. Please understand that this is not chart patterns, right? So that you don't go and draw it and think, oh, Chikwado drew chart patterns and I'm drawing chart patterns and it's not working. So if you don't understand everything that is going on, take a look at gold at all-time highs. This was what happened. See this high here? And then guess what? Coming into the future, the market taps it and runs away. And why do I have, I'm sure by now you know why I have this thing here, right? I'm expecting another tap and another runoff. So, ladies and gentlemen, this is how we look at the market. How can one join? The best way to join our community is when you sign up for your Tickmill account, make a minimum deposit of $100 into your trading account, send us a message with evidence that you've signed up and that you've made your deposit. And of course, we will take you into our community. All right. We want to make sure that we are growing together as a community and we are supporting each other as traders. So make sure that you sign up a Tickmill account, make a minimum deposit of $100. And of course, you will send us a message showing us that, yes, I've signed up, I've made a deposit, and then you join us. All right. So the question, I believe I have been able to successfully answer all of these questions that I have. So can you teach someone who is a beginner and who is not in Nigeria to attend classes? Yes, you can join our beginner series online. And thankfully, let me see if I can pull that up. So our online community, we're still, so this is our online community. So where's the beginner series? So the beginner series is somewhere here. Well, I think there's some of the, this is where we're uploading all of those courses. We still have all of those courses worked on and within the Google Drive. So as soon as it's all ready, it is going to come in here. All right. We're going to pump the links to all of those courses. They will be in here. And for something like our, where is that? Weekly market analysis, same way you have the link here. So when you click any of these links, it will take you to a video where we break down the market for our students. All right. So, and then the advanced trader series, we have all of those things stacked up in Google Drive, and then we'll be sending the links in here as well. Okay. So please make sure that you are very much connected to us, and you will not, I'm very sure that you are going to get a great deal of value for, for your time and your money. All right. So Ilo Chukwemere, please. So I think if you have any question, please do type it inside. Is this a broker? Can I have access to the Discord? Please, yes, download your Discord and we'll send you the link. By the way, our Discord community is free. It's divided into two. We have a free community and of course the premium community where you can only get access by making a deposit into your Tickmill account. All right. So you have the premium community. If you just join the free community, these are all the things you will see. You'll see the trade ideas that we do publish here from time to time as well. Of course, you can see me. I send in analysis here as well. So send you, okay, so we're going to put out a link. So please, the link to our Discord is, if you head over to Instagram and you follow me on Instagram, so if you follow me on Instagram, let me just quickly type that out. So if you follow me on Instagram, you will see, you are going to see all the links. Please make sure you follow the correct page, guys. I plead with you. Make sure you follow the correct page. So if you follow me on Instagram at this name, at Hosanna Chikwadom. So if you follow me on Instagram, at this, right? If you follow me on Instagram using this handle, you will see the link there. It is boldly, it is there on my page. It is very bold. Please, you will see the link to our Discord community in there. Please make sure that you use the correct links. There are guys who might impersonate me, especially on Telegram and all those places. Please make sure that you do not fall for any scam. I plead with you. Okay. So please just make sure that you are using the correct link to our communities. Is that okay? And if you also have any questions about anything, you can shoot me a direct message on Instagram and I'll be more than happy to get back to you. All right. So please, we are going to have another section, another webinar next week. And we are at the end of the day, at the end of this series, we are going to bring all of this together. Apart from we've taught you this, how it works, please, between now and next week, go and do a very thorough back test so that you have a deep understanding of what we're talking about. And you can see how very deeply we've come and how profitable this can really be. So please make sure that you back test, look at your charts, look at your data, and actually gain clarity for yourself. Next week, we're going to be showing you how you can actually apply this. At least I've shown you the trade that I did take on this, and you can see how this is very, very practical in every sense of its approach. At this point, if I close this trade, I've done very well. I mean, if you close a trade at a 2-to-1 or roughly over a 1.9, it's a great trade. This is a very, very great trade for me. And it doesn't matter whether it doesn't have to get all the way to here for it to be, oh, it got a 5.1. That's not what this is all about. And trading is not about being right or wrong or catching the highest risk reward. It's about maintaining a consistent mindset and a profitable attitude throughout the market, irrespective of market conditions. That's what this is about. As long as your trades, you take a minimum of a 1-to-1 on every single trade, you will be profitable long-term. All right. So that is what this is all about. So next week, we are going to really, really dive deep into the most powerful tool that any trader can have, and that is your mindset. If you do not have a bulletproof mindset, we can give you this strategy, we can give you any strategy under the sun, but you will not be able to make money with it, because we know that with every strategy comes its drawdowns, it comes its winning phases, it comes its losing, it comes with a lot of things, and it equally comes with a great profitability as well. So we know that it comes with all these things, and this is why we have to absolutely prepare you for what is to come and how you can actually trade our system and trade it profitably. So please make sure that next week, make sure that you do not miss this. I want to say a very big thank you to all of you for turning up. I love the fact that, we turned up more than we turned up last week. But if you have any friends who want to learn this craft, who want to learn how to trade, I want to assure you, at least you've seen how we trade. I've traded twice in front of you. You've seen me trade twice in front of you. And I want you to know that, yes, we know our craft. We're not just talking about trading. We're just saying, oh, buy here, sell there. And then I'm talking about trading on the weekend, and I'm trying to teach you how to trade on the weekend when the markets are closed. This is the market. This is real. And I am here to guide you and show you the proper way how to do this. So I was trying to sign up on the Tickmill account after downloading the app, but it doesn't respond. So please, if it's not responding, please use the website. And then also try to make sure that your app is up to date, but just make sure that you use the website if you have any issues on the app as well. All right. And you also might want to, maybe you close a few apps on your phone so that, your phone gets enough room to, to work with the app. All right. All right. So please, how do I join? If you're not in Nigeria, please shoot me a direct message on Instagram. I'll be more than happy to get back to you. So any further inquiries, please make sure that you leave that in my box in Instagram at Hosanna Chikwadum. Please make sure that you do that. All right. And I'll be more than happy to help you. So the website, this is the Tickmill website. I'm going to head over. So www.tickmill.com. Very powerful. I took a trade. Okay, I took the trade on Euro USD2 and I'm in profit. Big congratulations to you, Ifeanyi. Big shout out to you. Big congratulations. So I'm very happy that someone at least took the trade and is seeing the profit as well. So please, Ifeanyi, big congratulations to you. Big shout out to Ifeanyi as well on the trade. All right, so this is Tickmill. This is www.tickmill.com. Very powerful website. And for those of you, if you feel the trading, maybe it's too difficult for you or something, you can actually earn a lot of money being an IB. And all you have to do is refer clients. So for those of you who have asked you to invite your friends over to join us, you can create an IB link and use your IB link to invite your friends to Tickmill so that when they do sign up an account and they begin to trade, If you're trading on a classic account, you can earn as much as $10 for every single lot that your friends trade as well. And of course, we have ways of supporting our IBs. We can sponsor your events. We can also give you t-shirts, caps, and all these things. And if you have a trading community that you want to bring into us, of course, we can also help subsidize some of your services so that your students can either get it for free or get it for a very, very discounted rate. And of course, you also make money as well. So please, we need you to partner with us, bring Tickmill to the knowledge of Nigerians. We also need you to also show people that we know this thing. When we are talking about it, we're not just, making random statements about trading and claiming things that we're not. We will show you the emphatic way the market moves and how it makes money, and we'll take the trade right in front of you and show you how profitability actually comes. So please make sure that you connect with us, and I'll be more than happy. So if anyone has any questions, please make sure, shoot me questions on Instagram, and I'll be more than happy to assist you, all right? Thank you very much. And until I see you next week, please keep your eyes. When will your office be open? Our office is going to take off first week of July. Many thanks for the webinar. Yes, our office is going to take off first week of July. So make sure that you connect with us as well. And we're going to make that public. We're going to have the address also on our Instagram channel and our Discord as well. Everywhere we have online presence, we're going to make the address of the office very much open. All right. So if anyone has any question, please shoot me that on Instagram, and I'll be more than happy to help you. Until I see you next time, I wish you good luck and, of course, the very best of trading. Thank you.